Hello traders, it is May 8th, Wednesday. We're about halfway through the trading session. It's time for our live event. Before we get started, I'd like to go through some of the recent picks that we've had. That way you can judge how accurate our analysis has been. You've got at least some basis to see what our performance is and then to get a feel for how the system works. So today during the live event, I am flying solo, so I won't have Harry here to bounce ideas off of. So it'll also take me a little bit longer to kind of go through some of the questions that you might have. And this will follow the format of most of my normal videos. So I'm going to have to kind of fill in the blanks, keep things going, and kind of keep the dialogue going. And then we'll hit some Q&A. So let's take a look at some of my recent picks. Then we'll get into market analysis. I've had bullish and bearish picks because the market has been relatively undecided on which way it's going to go. We've been looking for a market bounce. We've got one. Hasn't been the strongest of market bounces, but we are starting to move higher, and we've been able to move through a key resistance level. So based on the 50-day moving average and AVWAP-Q and the bounce that was pending, we had some starter long positions that we took. And so APH was a stock that I highlighted 3 sessions ago. So we'll start with that one. And APH has a really nice D1 chart. It's got a great breakout. Oops, let me load that up. It's got a nice breakout to a new relative high. You can see how it's through this high plus trend line right here. That was about a week and a half ago that I highlighted that right in here. You can see how the stock has continued to move higher. Actually, it was more along the lines of in here. And so that's been a nice pick. We'll take a look at the 5-minute chart. You can see how the stock has been grinding higher today. APH, nice pick. Love that D1 chart. Love the strength. You can see how strong that trend has been. Get a little bit of a pullback, bullish hammer, breakout to a new relative high post earnings. Get a little bit of a pullback on that earnings reaction, and the next day, bullish engulfing candle. I loved it. And this is when I highlighted the stock, AVWAP-E. That's been able to find support right there. Stock continuing to move higher, and we've got our market bounce underway. So I still like that stock. During the live event last week, Harry and I both gave you our long picks. MMM was mine, and you can see here that the stock posted earnings. It gapped up through this horizontal resistance, gapped up through some downward sloping trend lines. Really like that. As I'd mentioned to you, this is going to be a nice longer term play on the upside. It's above all the major moving averages. It's getting through some key resistance levels. You can see the high plus trend lines. These are automated trend lines in Option Stalker Pro. You can also see the high minus trend lines that it's been able to breach as well. After earnings, we need to give the stock a little bit of time to get its bearings, to digest the news. And what we'd like to see is this gap preserved. Well, MMM has not really preserved the gap as well as I would like to see, because we're in it just a little bit and we've had a decent market to work with. So it's a little bit softer than I would like, but we're getting into that 5 to 10 day period post earnings when the stock starts to show its true colors. So what I would like to see is a continuation in the market higher, and I'd like to see MMM get above AVWAP-E, that 97.50 level, in the next couple of days. If it can do that and then hold that support level, I'll feel really good about perhaps selling an out of the money bullish put spread on MMM, or perhaps just getting outright long some deep in the money calls with a few months until expiration. You can see that the historical IV on this is 22, relatively inexpensive options. That's good. That's why we like to go deep in the money, buy as much time as we can, get a very high delta, and then it's a surrogate stock position. We're looking for that stock to continue to move higher based on the price action that we've already seen and based on the knowledge that we have a breakout with the overall market. So MMM was my pick from the last live event. Then Sunday, I did a video and I highlighted TSM. That was a pick that I liked for this week. And there's the price action Monday. You can see the stock is pretty much where it was when I did the video on Sunday. So it's moved a little bit higher, but not dramatically. I still like the stock. Downward sloping trend line, breach to the upside, above the 50-day moving average, above AVWAP-E. You can see how on earnings it had this gap down. That gap has been since filled and has been able to stay above AVWAP-E. Yeah, I like this stock. You can see that it's been strong relative to the market. I like it. I think that TSM is going to continue to grind higher. So last week, Harry's bullish pick was NIO. And that was right in here was the live event on May 1st. And you can see how the stock has been able to move higher. It bounced off of the 100-day moving average, meaning it got rejected off of that 100-day moving average. And so as the stock was starting to approach that level, you should have been aware of that and you should have taken some gains. You can also see this high minus trend line here also came into play right at that same level. So it got as high as $6.04. And back here on the 1st, it was somewhere around $5.50. So it's about a 10% return. Decent little stock play. So let's take a look at what the market has done and do some market analysis. Let's get our bearings. And then perhaps I'll answer a few questions and we will take a look and see what else we can find for today. So this pullback right here happened within the context of a longer term uptrend that was very, very strong. So we knew on this red candle that there was going to be uncertainty and there was going to be some price movement back and forth. This was a time to go to cash to see what was going to happen. A dip, very possible, very likely. As that dip unfolded, we started to see some nice consecutive red candles. But what you will notice about each one of these red candles is that there is overlap. So we're retracing into the prior candle, we're gapping up, and then we get confirmation of selling pressure. We're gapping up, confirmation of selling pressure. So all along the way, there is overlap. So that tells us that this is not a particularly strong move down. We found support above the 100-day moving average. And then we tested that support and we found support at an even higher level. That tells us that buyers are very anxious around that 100-day moving average because they don't feel that the market is going to get back down there. They are buying even earlier and even earlier, and that's what gives you a series of higher lows. That's good. That's bullish. That's what we want to see. Now, with this strong market rally in here, what I would have preferred is not to have dropped this far down, to maybe have just taken out the 50-day moving average, stack green candle, stack green candle, stack green candle to a new all-time high. That would have been really, really, really bullish. Boy, could we get behind that kind of a move. We had the FOMC statement. We had earnings coming out from a whole bunch of companies, including mega cap tech stocks. We didn't get that move. But that certainly would have put us aggressively long. So now we see the depth of this pullback and we are more passive. We're waiting for those signs of support. And how do we bounce in here? Well, we bounce a little bit, but we don't stack any green candles and blow through the 50-day and AVWAP-Q. No, we don't do that. We rally a little bit, we test. We rally a little bit, we test. So this bounce is not particularly strong. Look down below here. Ah, light volume. So that tells us that buyers are not super aggressive here. They're supporting the market, but they're not gobbling everything up in sight. And so as we started to come up off of this support level once more, we rested right at the AVWAP-Q level and the 50-day moving average on Friday. We had the jobs report on Friday. Economic conditions are starting to soften. We had 175,000 new jobs, 240,000 new jobs were expected. So now all of a sudden you have the bad news is good news crowd who's in control. They are looking for a Fed rate cut. They are looking for a softer tone from the Fed. The Fed did ease back on their quantitative tightening. They rolled that back from 60 billion per month to 25 billion per month. That is considerable, and that is not tightening as aggressively as they had been, is actually a form of easing. And perhaps they will ease back off of that quantitative tightening at their next meeting, and perhaps they will start looking at a rate cut later this year. That's what the market is rallying off of right now. So we had GDP decline 2% quarter over quarter. That is significant. ISM services accounts for 80% of our economic growth. ISM services in contraction territory for the first time since December 2022. Okay, that's also significant. Now watch those ISM surveys very closely, because as a survey, it's not backwards looking. It is a current snapshot of where supply chain managers are right now and what they are expecting as they look forward. So very current number. So I would prefer, like we had back in here, a go-go gangbuster economic cycle where we see lots of activity and lots of growth, and where the Fed has the latitude to be higher for longer, keep interest rates up because the growth is so strong that the market is able to shoulder higher interest rates. That is the environment that I like to operate in. Now that we're starting to see softer economic conditions, we have to be much more cautious, because the market is not going to put up with a hawkish Fed. They were willing to tolerate higher for longer in here, but that mood is going to sour very quickly, and it's going to change to the Fed waited too long. They needed to cut rates earlier. And all it's going to take is one additional bad economic number. So we've had a little series of weak economic data points in here, and that gets the bad news is good news crowd going in here. And that's why we have this rally. But as soon as we get any kind of economic bad news, they are going to be clamoring for the Fed to cut rates. And if the Fed doesn't cut rates, you are going to see a market drop. Market will send the Fed a very clear signal, and asset managers will take risk off. They'll be like, well, if the Fed's not going to cut interest rates anytime soon, well, then I'm not going to hang out in the market here. I'm going to reduce some of my risk exposure. And then the market pulls back, and it almost forces the Fed's hand. So that's how I see things unfolding right now. I loved this rally. This is a pretty decent size dip that we had. We've bounced off of it, not with any great conviction, starting to see some signs of economic weakness. The possibility of a lower high double top still looms. So the way that I would characterize my long exposure right now on the swing side is I have my foot off of the gas, still moving forward, and it's covering the brake. So if we pull back below the 50-day and below AVWAP-Q, the starter long positions that we had here on a swing basis, The ads that we had Monday right here will be on borrowed time. Our average cost, enter here, is still down here. So if we take out these support levels with conviction, I'm ready to bail. I gave it a chance. I was in some strong stocks, and now I'll go to the sidelines because we could have a potential double top lower high, and these resistance levels that were above could have been just a little bit of a head fake. Hey, let's get some buyers interested. Let's push our way through, see what's up there. And oh, look, we weren't able to get back to the old high. And then the sellers will return. Like I said, economic releases are going to be very important from this point forward. I'm passively long on a day trading basis. Okay, I'm favoring the long side, but not very aggressively. If I see a really good short, I wouldn't hesitate to take it on a day trading basis. On a 5-minute basis, here's what's happened today. So we had that nice little rally on Monday, and let's see what happened Monday. So we've got, I'll put up 1OP, and I can answer questions on 1OP too if any of you have them. So on Monday, we had this nice rally up. We had a gap higher, and then the market tried to get through the high, was unable to, and then it just kind of waffled around VWAP. We did get through the 50-day moving average, and we got through a VWAP Q right on the opening. So this tells us that there is market support. If there weren't, this gap up, wham, 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 it would have filled right away. And the fact that we were able to stay here and hold it told us that buyers were supporting the market. Eventually, we got this nice bullish cross later in the day. We got a new high for the day. This is where you could have entered and been fairly aggressive with your longs because we already had a breakout above the 50-day moving average. We're already above AVWAP-Q. We had 3+ hours for the sellers to knock this market down, and they didn't. And we just had a benign 1OP bearish cycle, and this tells us that we can expect to see maybe a little bit of strength in here. Hey, we poked through to a new high of the day. All right, and you can see how that buying accelerated through the course of the day. You have one big day, the next day is likely to be light, and it was yesterday. So yesterday we spent most of the day just moving sideways. We were able to finish a little bit higher on the day, but fairly choppy session. What happened today? This is a pretty dang good tell. Today, we had this gap down, and instantly buyers came in and showed their support. And on that first move, we filled the gap. That is a good sign for the rest of the day. So I would be favoring the long side today. This was the bid check that we needed to see to tell us that buyers were still there. Now the volume has been light, and that's not particularly great. It tells us that there's not a lot of conviction, but even on light volume, the market can float higher while it's waiting for news. And that's what I expect to happen. You've got long tails right here bouncing off of VWAP, and you've got a bullish cycle starting in here. So I'm expecting to see some higher prices in here. Let's take a look and see if we can find a couple of stocks that might be good for today. And I'm going to go into Green Royal Flush, and I'm just going to be looking toast. That's a really nice breakout there post earnings through lots of horizontal resistance. It's on its high of the day. It's been able to hold those gains with a market pullback in here. How do I handle this? End of day. Let's set an alert right there. If we can get above that level, I'm much more interested. Just going to take a look and see what we've got here. JPM, I like this. I like this a lot. This, I would be getting long JPM in here. Why? Because I got the little market dip. This is a bearish 1OP cycle. VWAP was preserved. I've already filled the gap on the first attempt. That is bullish. Resting on VWAP, that is bullish. Bullish cycle starting up. Okay. market is intact. I have what I need from the market. What bullish stocks do I like? Well, during that market dip, what did JPM do? It made a new high for the day. This stock is a good buy right here. So we're looking at 193.42. Do I have to rush in on 3 stacked green candles for a stock that's been choppy all day? Hell no. So let's just set a little alert right here. And if we pull back to it, that'll provide us with a nice entry point. But yes, I like JPM here. I did not take a look at the daily chart, so let's take a quick look at that. And there you can see it's in a compression. It's still got some horizontal resistance here. I would definitely like to see it through there. And what we can also look at is what is the ETF doing for the financial sector. Oh, hey, that's getting through some horizontal resistance right here. So the sector looks good. JPM, I like it. So WFC, also a financial. See if there's anything else on the list. Those are the 2 financials. Compression, moving higher above AVWAP-E. Take a look at the M5. All right, it's been choppy, making its way higher through the prior day's high. That's all good. WFC looks good also. So let's see what happens in here. We still have plenty of time. No reason to rush into a trade. And I promise you I'm going to take some questions now and just kind of look around and see what else we might have for a trade that we could monitor now through a high minus trend line, through horizontal resistance, MO, decent volume today, good relative strength, chugging higher. MO looks like it could be a prospect as well. Go into heavy buying, see what we got going here. Start with the D1 chart. Now, I don't need to be buying that. You could, I mean, on a day trading basis, Starbucks also rallying off of a big drop. This is like catching a falling knife. So if you're day trading something like this, you better be a seasoned pro because that bullish looking price action could change very, very quickly. Comcast. Big early surge, nothing since, not that interested. I'm just looking for stocks like this that have solid green across the board. You can see this is a custom column layout, M5 through D1, looking at the buy signals on it. Then I'm looking at relative strength across different time frames. The more green dots I have going across, the better. Take a look at red hot, see if anything's there. That's all I'm doing right now. Morgan Stanley, another bank stock. Nice. Teva keeps coming up on my lists here. Earnings before the open, trying to establish a new high. Big breakout here. That's nice. Let's see E-reaction. How has Teva typically responded? Big gap up. Big gap up here, continuation, big gap here, continuation. This is the 5-minute chart of Teva during the last 4 quarters, during the first opportunity to trade this stock after the earnings announcement. That's what E-reaction gives us. This allows us to go back and look at post-earnings candidates that we might be considering to trade to see if there's a pattern. Gap up, test, new relative high, continuation. Okay, so there could be a little bit of a pattern in there for us. And right now we've got the stock really holding up well during this little market pullback. Teva looks like it could be a decent little long in here. Been continuing to grind higher. So that's another one that we'll want to keep an eye on. And for now, I'm going to just go in and take a look at some of your questions, see what we've got here. So please give me a minute and let me take a look at what we've got. Will's helping me go through some of my questions here as well. People want to hear about my fishing trip. Yes, I had a really good trip. I fished the upper Mississippi this weekend. You know how I always tell all of you that you need to strike when the iron's hot. When conditions set up and your odds are aligned, then you can expect bigger gains. And so this is a really good time of year to catch smallmouth bass on the Mississippi River. They are just off of their spawning beds and they're hungry. So caught some really big fish. And we had changing conditions. And so once we were on the fish, we just kind of stuck with it. We had planned on doing 2 days of fishing, but instead we did one very long 12-hour day of fishing. I had a guide, excellent guide. And the whole deal is the same thing as when we get on a really good trade. Oftentimes the temptation is, I've made so much money on this trade. I'm going to take gains. I'm going to take my gains right now. And you exit it, and then you watch the stock continue to move higher. Well, the analogy that I'm going to make is that we had a situation where it took us a couple hours to figure out the fishing pattern and to get on the fish. And then once we had it dialed in, the bite was really, really good. And so we're getting to the conclusion of our day with the guide, and we started contemplating, we've got weather coming in tonight and we could lose these fishing conditions. In fact, it's very likely because the temperatures are going to drop. When you get rain, then the water clarity changes, the water level changes, the fish move. So we would have to go through that entire process the next day, and it could take us 2 or 3 hours just to figure out what those patterns are. So instead of bailing on our fishing that first day, we decided, let's fish the entire day. The chances, the odds of the bite being as good as it is right now are less tomorrow morning after the conditions come in. So let's stay hot. Let's add to the position. Let's add to the trade. Let's keep on going. Bird in the hand is better than 2 in the bush. Well, in this case, we're actually just pressing. We're increasing. So, great fishing trip. Just love that part of the country. If you ever have a chance to go to the upper Mississippi and check it out, it is some really cool backwaters wilderness. It's not main channel. It's not barges. It's not fishing below dams or anything like that. We're up into these wetlands and tributaries, lots of bald eagles, just absolutely beautiful stuff. So enough about fishing. There are a lot of analogies because what we're doing every day is we are fishing for stocks. What is my opinion on GE? All of you, if you post questions, you want me to look at your stock, please tell me why you like it or why you hate it. I need to know what your thinking is and which side you're on. Then I can better answer your questions. GE is a stallion. It's continuing to grind higher. I like it. I think it's great. Look at this trend. Very few pullbacks, if any. That tells you that institutions are just steady buyers, and they are long-term buyers. So yes, I like GE. Looks great. I would continue to ride it. And on every little market dip or retest that the stock continues to charge higher, that's when you want to add. So you get a little bit of a market dip in here on a day like today and a little retest of this breakout in here, and GE continues to forge its way higher. You're adding to the position. Your average cost along the way is way down here or way down here or way down here. You can weather a pullback. And by pressing, yes, you're going to have a larger position size, but mentally and emotionally, you're able to handle this trade because you know that your average cost is always much, much lower than the current price. And if the stock starts to show some signs of weakening, you can take your gains then. But right now, it's not showing you that, not even remotely. Very nice, tight, strong pattern. Is there anything that I use to filter out false signals in 10P? So 10P, the beauty of it is that it kind of does the unexpected and it doesn't correlate with other indicators. There is just as much information in a benign cycle as there is in a cycle that produces. What do you mean by that? And what the hell is 10P anyway? For those of you who are new to my channel, 10P is an indicator that I developed many years ago. It took me 10 years to develop. It's not derived from any other indicator, so it does not correlate with anything else that you might have. Of course, there will be periods when you might look at it and go, hey, this looks like SMI. But it's just temporary because, trust me, 10P does some very unusual things that you wouldn't expect it to do. So, case in point, right here, we've got this is a bullish cycle. So when the red line is above the blue line, and when it's coming out of a deep trough, this would be a bullish signal. This would be a bearish signal off of a big spike and a cross where you have the red line below the blue line. So you could look at this and you could say, oh, hey, we're getting this bearish cross right in here. This is where I need to be short. Well, no, you would not do that. You have got to wait for price confirmation because this indicator is early. So what you'd be looking for is at least a breakdown below VWAP. Well, we didn't get that, not even remotely. So VWAP was preserved. And now you're waiting and waiting to see if there are any signs of weakness. Still riding your long positions. If you had gotten long in here, you've got these nice long candles into the midway point of the gap instantly. You didn't have to wait. It wasn't like sideways, sideways, sideways forever and then a gradual rally. This was buyers saying, I want in now. Okay, good. That tells me that buyers are aggressive. So as you start getting up in here and you get this bearish cross, all right, now you're in wait and see mode. You want to see if this bearish cycle produces anything. You like the price action that you've seen to that point, and now you get follow through buying that fills in the gap completely. Okay, I know I don't need to be super aggressive with this kind of choppy price action the day before. I know that this rally has come on light volume. So I don't need to be FOMO Joeing in here buying breakouts on strong stocks. Instead, I'm going to let the rest of this cycle play out, and I'm going to watch to see how big the retracement is. During this bearish cycle, I want to see VWAP preserved. The longer it's preserved, the better it's preserved. What do you mean better? It's preserved or it isn't. That's not even remotely true. What you'd like to see is a test, 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 and then a long green candle, and then followed by another green candle off of VWAP. Why? Because it tells you, just like here, buyers are anxious. They are excited. We want them excited. We want them feeling like they are not going to have another chance to buy this low. Not seeing that. Peck, 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 while this bearish cycle is continuing. So if I'm long in here, remember, I'm fairly passive in here, watching to see what we get the rest of the way. Well, I don't really have anything yet to tell me that I need to be adding to any kind of long positions. If I never got long, I'm waiting for this to complete. I'm waiting for this support, and I'll be waiting to see if we can get through this resistance right here. So Will is just letting me know that Harry is letting us know that he is bearish. So he is looking for a pullback. And there is a little crack through VWAP right here, and we've got this bearish cycle continuing. So what do you do right now? You've got your long positions on. If you're long bullish stocks that have performed well, some of them I've already shown you, Teva, for instance, well, you don't have to bail on it yet, but you sure would like to see it preserve its gains during this market pullback. Then if it starts to falter, then you could start taking some gains in it. So you can stick with it as long as it's treading water, just like this, okay? Down, 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 flat, flat, flat. So there's no risk in hanging on to the position, but if you start seeing the market take out VWAP, all right, now I would clearly be against the market. I'm trading against the market. Strong stocks can remain strong for a long time, but if we start continuing to deteriorate here, then sooner or later, even the strongest of stocks is going to pull back a little bit. If I'm swing trading Teva, I'm not as concerned about it. If I'm day trading Teva, yeah, I want to lock in those gains and I want to wait for that market support. And when I have it, I'll know that this stock is still worthy. So I just come in, set an alert. If I exit and the stock gets above that price point, I can always re-enter. So let's see what happens with the market right in here. And with regards to Harry's comment about being bearish, I have no problem being bullish or bearish in here. And so as I mentioned earlier, the foot is off the gas. Right now you're kind of decelerating and coasting, and you got your foot on the brake in case we break this major was resistance, now support level. We break that with a long red candle and some bearish economic news. I have no problem going short on the notion that there is a lower high double top. So I am very passively bullish in here. Here he's got some shorts on, and I was out the first 2 days this week, so I'm not really sure what he's got on, but perhaps he'll chime in. So let me take a look at a couple of other questions in here. And one more thing about 10P, kind of how to use it. And again, the benign cycle that we had from Monday, right in here, I had talked about. This is a benign cycle. What does that mean? Well, you've got a bearish cross right here. You had a series of benign cycles. So you got bearish cycle in here, market flat. That would be pretty bullish. How do you get to that? Well, because normally this bearish cycle is going to produce a bearish move lower to fill the gap. When it doesn't do that and it holds all the gains, this is actually pretty bullish. Okay, well, this means that this bullish cross should produce. It should produce a new high of the day. And I would certainly be positioned in that fashion. So now you get your bullish cycle. That didn't produce either. Now you get a bearish cycle. Well, that didn't produce either. With every benign cycle, the chances that the next cycle is going to produce increases. And that is information that you don't get from any other indicator. So finally, you get a bullish cross and a new high of the day. Awesome. That's where I can get long. And this bullish cycle from here lasts pretty much through the course of the day, and you're able to ride that move higher. You did have to wait more than half the day before you had that decent trading window that's set up. And this is just a giant compression. So you need to be able to read price action. You also need to be able to interpret what 10P is telling you. That's a classic example of when the market's not doing anything. Any indicator, I don't care what you're using, when the market is compressing in a sideways fashion, tight trading range, there's not one dang indicator in the world that's going to give you any good signal because the market's not going anywhere. It's freaking pancake flat. Buy and sell signal doesn't even matter. You're trapped in a range. It's not going anywhere. So Let's move on from 10P and take a look at some of the other questions that you have. AVWebQ. Disorderly House asks, for AVWebQ, can you please confirm the date you're using for starting the quarter or watch your video? A starts triple witching. Yes, starts with the average weighted price after triple witching. So starting with Monday. That's what I use. Doesn't mean that's what you have to use, but I find my starting point to be very valid. ARES has been consolidating for 3 months and it broke out yesterday. How do you tell if a breakout is significant? Well, the longer and tighter the breakout, the more significant it is. And stocks that have been dormant for 3 months, I'm not a huge fan of, because that's a little bit long. This is some choppy, janky stuff, to be quite honest with you. I am never going to trade this kind of garbage, okay? Because every time it looks like a breakout, every time it looks like a breakout, every time it looks like a breakout, it pulls back. So I wouldn't be remotely interested in something like that until you can get a breakout like that that has follow through. So you never buy that breakout. You would need to stack another green candle and stack another one and get some escape velocity from this 140 level. Okay, then on heavy volume, I can trust it. But until then, liar, 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 you're a liar. I'm not going to trust you. Every move, every breakout, every attempt gets faded. So I'm not going to trust you until you prove to me that I can trust you. And that would only come on a breakout, close on the high, followed by a long green candle, close on the high. Why does that all of a sudden validate everything? And Teva just broke out, so I got an alert. Remember, I'd set that alert at the high of the day. Well, there's my breakout there. So anyway, on ARES, the reason that's so important is because the guys that were buying the breakout here are still buying the next day and buying the next day. They can't get enough. And I would also, on that earnings announcement in here, just blow through this, obliterate it. Why? Because that tells me the news is material. This company did something spectacular. Asset managers were indifferent about it previously. Now they can't get enough of it. And they will buy it on the breakout, and they'll keep buying it and keep buying it for days. That's the kind of momentum that we need to see. Does 10P work on the daily chart? It is optimized for the 5-minute chart on SPY. Yes, it can work on a daily chart, but it's less reliable. I'll leave it at that. There's more need to understand divergences and benign cycles. Yes, it can work on a daily basis. We use it for day trading. It helps us time our entry and our exit for day trades on a 5-minute basis. I've actually got a lot of futures traders who use 10P on a 5-minute basis for NQ and for ES trading. It works great for that. I've traded it for years, trading futures. So yes, it does work well, but trading futures doesn't have the same edge as trading underlying stock. And there are many days when you've got to be a passive futures trader. Like in here, there was nothing there for 3 hours. You could not be trading futures in there because there's no momentum. There's no trend. There's no real price action to lean on. And today has also been somewhat quiet. You could have gotten long early in here, but you didn't know that this gap was going to fill in the fashion that it did. So I would still be waiting for this move right in here. Now we've got a bullish hammer through VWAP, and we're starting to get a little bit of a bullish cross in here. Well, I'd like to charge through VWAP and have a long green candle and have some follow through, or 2 or 3 nice green candles in a series that tells me that the buying is persistent. That I would feel much better about. But until I see that, I am not going to be actively pursuing anything right now as far as a day trade in here. Okay, so let's see. When 1OP doesn't oscillate as much, is that a sign? Well, I mean, it's had pretty good range today. You know, it's had a really nice rally in here. It's had a nice cross right in here, and it's had a really decent cycle. It has crossed over a little bit on the way down in here, so it's getting a little bit choppier, but you can see the price action in here has been relatively choppy as well. So we're looking for that nice cross in here. We're starting to get it. Got a bullish hammer in here. We're above the halfway point of this gap right here, which is also good. So I like what I see in here. We're going to be taking a look for some longs right now. And let's see what we can find. And I'm going to go into Green Royal Flush again. Teva was nice. We know that stock broke out to a new high. I would be long in Teva here, 1594. That looks like a good entry point. JPM, even during this last little leg down here, stock continued to move higher. I would be long JPM, 193.55. I like it here for a day trade. You've got the stock moving higher, oblivious to the market. Decent little volume in here. We've seen strength in the financial sector. We've got a bounce in the market. We don't need to trade S&P futures. We can trade relative strength. I can be early on a stock with relative strength, because if I'm wrong on the futures and we get a big leg down, I'm going to lose my ass in futures. It's just the way it works. I'll have to take a loss on it because I got the market wrong and I'm trading the market. If I make a similar mistake by being long JPM and the market has a big leg lower, what's my risk? Well, institutions are in here buying this stock. They're supporting it. So even on a big leg lower on the S&P 500, I've got cushion because the stock is likely to pull back just a little bit, if at all. If the market goes, this stock is going to go. It is leading the charge higher. Regarding a question on GE, if you were not in GE, could you buy GE right now? Of course you could. Because the stock looks strong. You don't have to chase it because it's just grinding higher. So you would start out with a tiny bullish position, a starter position. And then on every market dip, when the stock holds firm and when the market looks poised to resume its upward rally, you would add to the position. You would add to the position. You would add to the position. So your idea is to scale in on a very, very strong stock. Most people don't have the fortitude to do that because they want to buy stocks that have just dropped 50%. They want to catch a falling knife. They do not want to buy into a stock that is showing you that institutions are anxious as hell to own. But that is what you should be doing. So you start out with a small position. you're not going to sweat buying an all-time high if you have a small position. As the position starts to make money and move higher and show you that it's still got relative strength, you can add to it, and your average cost will be lower than the current cost. So you scale in. That's how you do it. If you come in here and you load the truck up after a big move like this, the first decent drop that you're going to have in the stock, you're going to think, uh-oh, I did it again. I chased. I got too much of a position on. I'm nervous. And you puke out of the position. You do not want to be putting on a lot of size in this situation. You want to gradually add to the position and scale in on your swing trades. But buying strength is what you want to do versus buying weakness. Meta looked pretty good to me. I have been watching that stock. It's actually in the D1 gap, so it had a negative earnings reaction right there. Stock pulled back, found support above AVWAP-E, above the 100-day moving average. So this all looks good, and it's got room to fill this gap. You don't like to see a big negative reaction to earnings. You had horizontal support right here. That's another level that you would be leaning on right there. So you want to see the open from this long green candle preserved. If you are long, you recognize that the stock has had weakness. You recognize that it is bouncing, that there was a reason for this selling. So you need to have your plan in place. How will I know when it's time to get out of Meta? How will I protect my losses on Meta if I am wrong on the market and on the stock? Well, on the market is currently going higher. It's had a breakout. I got everything I need from the market. If the market drops below AVWAP-Q and the 50-day moving average, I must be out. This is not what I expected. I expected that support level to hold, and now I'm wrong on the market. But as long as the market keeps going higher, I am expecting Meta to remain strong and to fill this gap. That is my thesis. If the market continues to move higher and Meta loses its relative strength, I need to be prepared to exit, especially if I get below this level. The odds are in my favor. I'm trading the odds. Trading the odds that the stock is going to fill the gap. I'm trading the odds that this bounce is going to continue. That's my highest probability outcome, but it's never 100%. And I understand what it's going to take to make me exit that position. Okay, so I think we should take a look for a couple of stocks in here and see what we've got going. Still finding support, so let's see if we can find something else that looks good. I like JPM. What's JPM done in here? I'm still on Meta. So let's look at Meta. What do I think of Meta on a D1 basis? I like it. What do I think of Meta on an M5 basis? I don't like it. It's pulled back too far and it's below VWAP right now. And it's continuing to sink lower when the market has been able to find support right there. So it doesn't have the relative strength that I want to day trade it. On a swing basis, I like Meta. And my swing time horizon is not always going to match what I want for a day trade. And right now, I'm going to focus more on day trading so that you guys have something that you can latch onto for the end of the day. I do like JPM. Let me look at it and see if that could possibly be my pick of the day for a swing position as well. I do like what I see in here above the 50-day moving average. I'd like to see it get above this line right here. So I don't know that it's going to make that cut, but we're going to keep taking a look to see what else we can find. And I am going to focus on the long side because right now on a D1 basis, we have everything working for us. Now all I'm doing is I'm looking down my list of stocks here, and I'm looking across for stocks that are making a new high of the day and that have lots of green dots. So right here you can see high of day or low of day. If it's a high of the day right now, I have a green dot. If it's a red dot, that means it's currently making a new low of the day. So PG, as bullish as it might seem on other time frames, is making a new low of the day. So ZIM making a new high of the day. Nice little breakout in here. Looks pretty good. See how easy it is for me to zero in on these stocks? Teva, new high of the day. M5. Goldman Sachs, right up in here. So I think financials for today are going to be our best prospect for finding bullish stocks. So we can conduct a couple of searches also. I'm going to look at strong after earnings. These stocks have recently posted earnings and the stock gapped up. Excuse me. Allergies are definitely getting the best of me, especially after being outside for a couple of days. So in any event, we're taking a look at stocks that have gapped up after earnings announcements recently and that are now above that opening price just after the earnings were released. The reason that this search is so effective is because oftentimes you don't see the company's true colors for a few days, perhaps even a week, maybe two. So that initial reaction is oftentimes a head fake, and then you get to see where the stock really wants to go. So what we're looking for here is a stock that recently posted and that is back above that opening price. So mRNA coming back, preserving this halfway point of this long green candle, preserving this horizontal resistance. That's good. This is a normal retracement. Do I need to be in there right now? No, I do not. Can I set an alert of some type? Yes, I can. I can click GTC. I can click on the top of that candle right here and the top of this one. Whoops, I clicked poorly, and so it's already been breached. Or I can just click right at the top of this candle and set a horizontal line or the top of this one. Now, if the stock is able to get back above AVWAP-E, I'm going to get that alert. So as it stands right now, no, it would not be one that I'm looking at. Qualcomm, nice breakout here, preserving this horizontal breakout. This is a post-earnings move higher. Yes, this could also be very nice. And it is above that opening price right there. So this is just a way for me to get this stock on my radar. And Qualcomm does look pretty good. So I'm just going to set an alert, and you should do this for any stock that you see. If it makes a new relative high, I want to know about it. If it's a week from now, 2 weeks from now, a month from now, all of those are good. So I'm still not getting the price action that I want on SPY to consider any longs. I've got a bullish 10P cross right in here. 10P is early. I need price confirmation. Pete, how do I know if I have price confirmation? I click end of day. I click on this candle right here. I click on this candle right here. If this downward sloping trend line can be breached to the upside, I'm going to get an alert, and that will come on a bullish 10P cross, and that would be a sign that VWAP has also held and that the market might be ready to bounce. So let's see if we get that alert. Well, let me try and answer a couple of other questions in here. What do I think of semiconductors going into Nvidia earnings? It's hard to have confidence with so much pressure on AI earnings reports. Well, AI is the future, according to everyone. It is the next big thing. And as far as Nvidia and what that stock looks like going into the earnings announcement, it is trapped in a horizontal trading range. You can see how it's compressing around AVWAP. Really hasn't been anything one way or the other to write home about. The stock is not moving a lot. So other semiconductor stocks, the ones that have already announced earnings, I'm leaning on TSM because they announced earnings and they said that their revenues are going to be up 30% in Q2. They raised guidance. Okay, well, I would feel comfortable holding TSM even into Nvidia's earnings announcement because they've already reported the cat is out of the bag. Other stocks like Intel, I think, are getting pounded. Semiconductor stock. So, it's kind of a mixed bag of results. AMD got knocked down hard after it reported earnings as well. So it's not, you can't go through and just say semiconductor stocks, they all look good, let's buy them. No, there's AMD. There's nothing going on here. So I think you've got to be very selective and you can't paint them all with the same brush. It's all price action too. Now we're getting a little bit of a crackdown in here. This is not what we wanted to see. But it's all based on price action. So how do I like AMD into Nvidia earnings? I hate it. The stock is not giving me any reason to like it right now. TSM, on the other hand, looks much better. And if I wanted to play Nvidia from the bullish side, I could pick this stock. If I wanted to play Nvidia earnings release from the bearish side, and I felt that the semiconductors had a chance to move lower, well, on its own right, I could trade Intel or AMD because both of those stocks have been weak. And so you would pick one of those two stocks. Could you do a balanced position? I'm not a big pairs trader, but I guess you could be short AMD and long TSM and kind of play a big move that way as well. So here he has some DG puts and BBY puts. And so, yes, last week, both Harry and I liked retailers on the short side. He had BBY as a short. I had TGT as a short. Again, the caveat for those short positions was based on the market, and we had to be below this resistance level and also breaking below this upward sloping trend line. If we had that type of price action, both of our bearish picks would have been what we were highlighting today. But since we broke out to the upside, the bullish picks were the ones that we had mentioned staying in. So you've got the 50-day and the 100-day and the market compressing between both of them. You really needed the market to move one way or the other before you could start getting behind some of those swing trades. It was resolved to the upside, at least for now. So that's why I'm focusing on those bullish picks. Yes, so I think we've already covered all the financials. GS looks good. Yes, it does. ACGL. Take a quick look at that. And yes, that's a nice breakout to the upside here. Excellent follow through. That's the way that you want to break through this high plus trend line, closing on its high with follow through. That's the critical point right there. This just gets it on our radar. This is what makes us money, is when we get that follow through. And that's the confirmation that we need. So we can take a look at that on a daily basis. And yes, this is a decent looking chart. Would like to see The volume's okay. It's been a little bit better than average today. So holding its strength very well relative to the market. All right, so let's see. We've got another bullish hammer in here off of VWAP. That's good. We still need to get through this. And we've got a bit of a bullish cycle starting to take place in here. So on the way down, you're reading 10P. This is the conclusion of a bearish cycle. You've had some strength early. You feel that there are buyers in there. There's our breach right there. That downward sloping trend line was just breached. One thing about downward sloping trend lines and breaches to the upside is that you don't want them breached by time. What does that mean? Well, it means if I drew this trend line and the market just went sideways for an hour, eventually that trend line would be breached. That's not how you want to breach a trend line. You want to breach it. Boom, big long green candle. You don't want time to have breached it. And this is almost a time breach right in here. So we've got a little candle right in here, a little wick. We can click on that. We can set our alert. Let's make sure we're through that. And then we'll know where we want to look. Let's take a look at JPM. And it's continuing to grind higher. Yeah, I would take a position. I would have taken a position in JPM based on that price action already back in here and these bullish hammers. I would probably be adding a little bit to it right here. This cycle looks like it's ready to start gaining some traction. They tested that bid and they drove it back with a long bullish candle. And we know that buyers have been in there earlier today. I would have enough confidence to try that play in here. But I want to see this breakout soon. I don't want to waffle around here for 30 minutes during this bullish cycle right in here and not have made any advances towards the high of the day. So I need to see something from the market here that tells me that buyers are going to try and test the high of the day during this bullish cycle. All right, anybody else got any questions that they'd like to have me cover today? I feel like I'm just kind of rambling and ranting. I'm at the 1 hour mark right now. I'm just looking to see what else you guys have up here. I can run a quick search, see what else we can come up with. SPOT, how do I like that? Let's see. Price action today, lots of long candles. Back and forth, lots of retracement, big time chop. Okay, this is going to be a hard stock to be in. If you buy it here at 302, are you going to be able to weather a drop down to 299? Well, that's what you better be ready to. That's what it's already done. Same thing with these long candles in here. So if you're day trading it, there's some pretty decent volatility in the stock right now. I do like the fact that it's above AVWAP-E here. You can see how the earnings came out, had a slightly negative reaction, but it was able to recover that pretty quickly. Be nice to get back above this earnings high right here. So that's where the earnings were reported. Stock tried to get through this resistance level, couldn't quite do it. So yeah, this is pretty constructive. I love this. Very strong. I love this breakout. Okay, pulled back, tested this horizontal resistance, now support and moving higher. So in general, I like SPOT. I'd probably like it better as a bullish put spread keying off the 280 support level. We've got the market up above what was resistance. Now that's support, so that's supportive. And if I can go out, I know that SPOT is not going to have earnings anytime soon because it just had earnings. I'd like to stay within about a 4-week period if I can. And right now we're at 5/8. So roughly June 7th is the expiration cycle we'll be looking at. The 280, 275 bullish put spread. If I can get $1 for that, I think that would be attractive. 280, 275. 61 cents bid, offered at $1.27. You'd have to middle that spread. Is $1 possible right now? probably would need to get it bid somewhere around 75 or 80 cents to have a shot at $1. But if you could get that spread done, yes, that would yield a 25% return in a 4-week period of time. And you would be leaning on that 50-day moving average and AVWAP-E. So you need to have key technical support levels between the short strike price and the current strike price. So the short strike price would be 280. You have one line of defense, two lines of defense. So that's why that trade, to me, would look good just from a mathematical standpoint. These dotted lines in Option Stalker Pro option chains, this is the 1 standard deviation move. This is the 2 standard deviation move. So you also have that working in your favor from a statistical viewpoint. But the primary thing is that you've seen what you need to see in terms of the stock having some relative strength and being able to distance yourself from the action and take advantage of time premium decay. Ricky asks if I feel that my trading improves when I've taken time off to do something completely different like fish. That's a great question. I actually feel like my trading probably gets a little bit worse. And the reason for it is because I'm not as in tune with what the market has been doing while I'm gone. So it usually takes me a day or two to go back and find out what the news was that was driving the market, what was the price action like. And so after about 2 or 3 days, I'm able to finally start catching up. But until then, I'm, pardon the pun, like a fish out of water. I'm still trying to catch up and get a real sense for how things are playing out. Taking the time off is critically important, though, because otherwise you can really get burned out. And that does happen to me. So as a professional trader and as someone who needs to schedule time off and take time off, probably the best thing that you can do is to really look at those holiday sessions, the long weekends. And typically when you have a day off for a national holiday, that means that the day before the national holiday is probably going to be pretty dull trading. The day after the national holiday is going to be a pretty dull day of trading. I call that a holiday hangover. As traders are off the desk, they're trying to get their bearings. Everybody is just trying to kind of get back into the swing of things. And so if you have a 3-day weekend and you take, let's say, Monday as a national holiday and you take Friday off, that's probably going to be a pretty good move. There's not much that's happening that Friday before a 3-day weekend. Or perhaps you take the Tuesday off after a 3-day weekend with the holiday falling on Monday, because again, there's not going to be much happening in the market. It's going to flatline. The volume's going to be relatively low. And so now you'll have had a chance to recharge your battery during a period when the market really hasn't done much. And you'll be able to feel like you've just taken a vacation because you had 4 days off in a row. The other thing that you can do is try and schedule your time off, which I always do. I try and schedule time off in August. August is historically just a very slow month. Once you get through that Q2 earnings, which tend to be late July, you get one more Fed meeting in there. And then after the earnings start to wane, the Fed is gone. They're in recess. Politicians in DC are in recess. So there's not a lot of political news coming out. There's not a lot of economic data releases. The kids are getting ready to go back to school. So traders across the country, everyone's trying to get their vacations in. So you should do the same. August tends to be a really good month to take time off, especially like the second week, third week into August. So again, you're taking time off when the market is going to hit kind of a dead spot. And instead of being tempted to trade, a very lackluster, dull market, you're not going to be forcing trades. You're not going to be tempted. You're going to be recharging your battery. You're going to be decompressing. And when you come back, you won't have missed a lot of volatility, a lot of news. So it'll be easier for you to get your bearings when you take time off during those periods. If you figure out how many trading days there are in the course of the year that are actually really good, solid trading days where you get a trend day, there aren't that many of them. So if you can kind of schedule your time off around those dead spots, even better. So you're not missing a lot of the action. FOMC statement coming up, you never want to miss those, especially when they align with triple witching. And we get 4 of those per year. So those weeks you need to be fully engaged, because those are weeks when you can expect lots of action back and forth. Ali, what is the biggest lesson that I've learned from the market trading in the past year or two? I know I have a ton of experience, but I'm sure I'm always learning new things. I'd say the biggest thing that I've learned is the relevance of a VWAP. Colleague of mine, friend of mine, Brian Shannon, has been experimenting with a VWAP and VWAP for a long time. And so I read his book, really listened to what he had to say about its relevance and why he feels it's relevant. And so then I started experimenting with it and finding different anchoring points, testing them, working with them, refining them. I would say that adding that to my trading mix has probably been the biggest thing that I've learned in the course of the last year or two. Has it changed my trading? No, I think it's improved my trading. It's another variable. So you just keep adding pieces to your existing puzzle. And when I look at how trading is when you first start out, it's like you've got your arms spread as wide as you possibly can, and you're just trying to get your arms around this monster. And as time elapses and as you pick up new lessons, then you eventually get your hands around it. And then finally you get to the point to now you're bringing out the last drop of water from a wet towel. And those are the final stages of your trading when you're really refining it. So the fact that there might be a lot of new things introduced at this late stage of my career, not really, but that has been a really nice addition. All right, just looking through some more questions, kind of scrolling through. I think I've answered almost all of them, and I'm gonna find a stock that I really like. I'm kind of good with JPM, but I think I might be able to find one that's better. So let's see if we can run a quick search, find something that I might like even better. And I don't need to lean on my current searches. I'm going to go into custom search. So I'm going to look at prior earnings that were a day ago to 25 days ago. I'm going to go into option liquidity. Maybe we'll go with a -2 here. That'll be a decent level of option liquidity. I could use relative strength D1. I'd like it to be above a VWAP E. This is custom search within Option Stalker Pro. If I click on the box once, it's green. If I click twice, it's red. If I click 3 times, it's unmarked. So let's see. Let's cast a wide net and see what we got. Lots of prospects here. Too many prospects for me to click through. I need to draw this net in a bit. So let's look at a trade signal bullish, see if that whittles things down for us. Okay, pretty decent. Still a lot of stocks to go through. Let's see if stock greater than prior day's high will work. So I'm going to go in and we're going to look at new high or low of the day. We're starting to get this list down pretty well where I'd be able to sift through them. If I wanted to buy in the money calls, I'd need to have a fairly low historical IV. MO we already looked at. Netflix is in here. Now we're down to a handful of stocks. So stock is strong relative to the market on a daily basis. Stock is on a buy signal on a daily basis. Stock has good option liquidity. Stock is greater than the prior day's high. Why is that important? Well, the market is below the prior day's high substantially, but this stock is above the prior day's high, so it is bucking the market. Okay, that's good. So let's see what the search has yielded. Above AVWAP-E, recently released earnings in the last 20 days. This is one search that we can run. I'm going to move this off screen and we're going to take a look at each of these. Perhaps we'll find a good stock. I like this gap up. I like this compression. I like the fact that the stock was able to hold all of the gains post earnings, and now it's moving through this horizontal resistance. I have this automated trend line right here. You can see that we're above that. We would also be above a downward sloping high minus trend line. I like all of this. I like AZN. What has AZN done? But it is a choppy, patchy stock, and that's because this is an ADR. So, yeah, it could easily be a very nice bullish pick. CRBG, take a look at that daily. That's a nice horizontal breakout, excellent follow through. Decent volume, good relative strength. It's in the financial sector, so we know financials have been performing pretty well. This is a choppy stock. That doesn't mean we can't trade it. It means that we would need to buy dips. So right click, create alert, go M5, find an HA reversal, bullish reversal. Right now, it is bullish, so it would need to have a bearish candle. I'm going to save this, and I'll show you what we'd need. There is a bearish reversal. Flat top red, flat green bottom. I would have gotten an alert right there. Flat red top, flat green bottom. I would have gotten an alert on an HA reversal right there. Right now, our servers know that it's on an HA continuation and that I need a flat top red and a flat bottom green. And if I get that combination, I will get my pop-up alert. And then I will be able to evaluate if the market is moving through VWAP and going higher. If it is, and I get that alert above VWAP for the stock, then I have the stock lined up and I have the market lined up. And then I would have a good trade, and I know that I can like it on a D1 basis. So, boy, we're almost an hour and a half into this, so I'm going to be racing to conclude here. Running a little bit longer than I would like. MO. I do like this. I like the fact that the stock is moving higher. It's been able to hold up well. NEE. Big dip in here that tells me the stock can be choppy. I look back, I can see that the stock retraces an awful lot. This is not what I want to see. Green, 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 45-degree angle, 30-degree angle. That's what I want to see. This is not what I want to see. Nice, easy flowing trends. That's what we like. Netflix looks pretty good. It has pulled back. It's still well above the prior day's high. Stacked green candles, big volume in here. Netflix looks good. Yes, it's below below VWAP today, but Netflix is filling in this gap and it is above the 50-day moving average. That's also horizontal support. So it's got a number of things going for it. Yeah, Netflix looks pretty dang good. Pins looks pretty dang good. Through horizontal resistance, earnings gap higher, buyers so aggressive that they are not letting any selling pressure from profit taking deter them. They're gobbling up everything they can get, and the stock is continuing to move higher. Pins actually looks really pretty decent in here. Pins could be a good long position for a swing trade. And I like that. I don't like chasing, but I like the fact that the stock has really nice follow through in here. So, all that said, I like AZN. I think this stock is going to continue to float higher. It's going to continue to grind higher. I liked Netflix. So now I got to choose one. It's in the gap, stacked green candles, strong today, above the prior day's high. Can I sell an out of the money bullish put spread on this? What would I key off of? I'm not going to get any credit all the way down here at the 100-day moving average, which is 565. It's too far out of the money. They're not going to give me anything for that. And I can see that the historical implied volatility on the stock is pretty low. So I could buy in the money options on that. Pins is just out of this earnings announcement, so I'd like to give it a few more days if I can, but I do like the price action. All right. I just like what I see in the banks and the financials too, though. So I think that might still be where I'm going to be leaning. What the heck? I got to make a decision. I'm going to go with Netflix. Here's what we need to see for Netflix. That 50-day moving average, AVWAP-Q, 512 on the SPY. It must hold. I don't want to see that fail. Certainly not a close below it. I would like to see this week us take out the high, which is 518.57. That would confirm that this breakout above the 50-day moving average is legitimate and that we've got the follow through that we need and that this is not just a little poke through head fake that reverses with a double high, double top, lower high. So I want to see this preserved. I want to get through the high of the week. If I could do that, I would have no problem buying Netflix, would have no problem buying Pins, would even consider buying AZN. So this is critical level. We need to make some progress today. We want to see this little drop, which now we're below VWAP, this little bullish 10P cross, never produced so far. So the cycle could continue. But right now, all of this is starting to just kind of wither away. We had a nice early bounce, but now our desire to get long and to buy something on the notion that we're going to bounce off of VWAP, it's not looking like that anymore. And this type of price action tells me we're probably not going to go very far today at all. We're just going to kind of waffle around. It was nice to see this test here and an immediate bounce off of it, but this kind of price action back here is pretty soft. So until you start seeing some nice green candles through here for day trading, I would be pretty passive on the long side. See what happens in here. If you get a nice test of this low and a breach below it, well, then obviously, especially on a bearish cycle, yes, you could start trying some shorts. One that I saw earlier that looked good. Trying to remember which one that was. was, I'm not going to lengthen this session any more than I already have. We're at the 1 hour, 1 hour and 30-minute mark. So I'm going to conclude this. If you have any questions, if I didn't get to your question, please post them in the comments for this video. I promise I'll go back and read them and I'll answer them in the next few hours or so. So thanks so much for attending. I'm going to do a video on Sunday and we'll recap what's happened with the market since then, and I'll have some new picks for you. So my pick of the day is Netflix. I like it. I like the support level right here. It's got to preserve its 50-day moving average, and I want to see some dang progress on this market breakout. So the market needs to prove to me that it's going to go higher. I'm not crazy about this dip. I'm not crazy about the way that the market has recovered. This looks very patchy, very choppy. I think that there's a good chance that we stay in this trading range really between 525 and 495 for a while. Market's just going to be waiting for the next round of news. So I am fine being long, but I am starter position, just added on the breakout. We've got a couple of long legs, and we're waiting to make sure that we've got follow through buying. That's all I've got for you. Thanks so much, everybody. We will see you Sunday.